Shares in Tencent under a little bit of pressure today. A bunch of reasons for that, but the Chinese internet giant missing the mark on profitability, probably by the most in a decade. The margin story is really where we are seeing problems. It's ramping up spending in a number of areas. Joining us now with the details, Bloomberg Opinion's Alex Webb. It's having to spend more to generate top-line growth. It's trying to pivot away from the gaming side of the business, which generated so much of the profit in the past. It's got to come as a cost. Why are investors shocked by this?
I think the scale of the spending was the big shock. Clearly, we know that in the middle of last year, China stopped approving new games, and that is the biggest revenue driver for Tencent. Now, one has to clearly imagine there was a decision at the top level to say, well, we are too dependent on games, we therefore need to find new streams of revenue. And they've looked at things like fintech, alternative content, films. You know, they funded films like Venom last year and Bumblebee, the Transformers movie, and we're going to see Top Gun, a revamped Top Gun come out, also partly funded by Tencent. Those ventures are expensive. We've actually seen them investing in fintech in Brazil, for instance. Now, that's coming at a cost. Revenue, in fact, beat expectations. So, you know, they are dry. That money is going somewhere. They're reducing money on marketing, but actually investing in new products. And one hopes then that that will pay a dividend further down the line.
Why is the stock selling off so much then, Alex? Clearly, investors don't have the same confidence that you do.
I mean, let's put it in a bit of context. It's a decline, but it's not it's not fallen off a cliff. It's clearly a big company, so a few percentage points of decline do represent billions and billions and billions of dollars, but it isn't catastrophic. It's always about, clearly that difference between the top line growth and what we're seeing at the bottom line. The size of the miss on the bottom line was about 20% less than expectations. That's clearly not insubstantial. One probably has to look at management's ability to telegraph what they're doing to the market, and I think that is probably their biggest failing here.
Still up 15% year to date. Alibaba's had a better run, but nevertheless quite a decent run thus far. Is the gaming business dead? The Chinese seem to be taking a slightly more producing a slightly more benign environment now. Games are going to come back. The question, I guess, is what's the rate of change on that?
Well, I mean, we've literally seen just this week Google introducing Stadia, which is their vision for cloud-based gaming. There's going to be a slow pivot clearly towards that. That's kind of good news for the likes of Tencent, the platform players, people who are not building the consoles necessarily, but they are the place where people play the games in the kind of virtual arena. It's going to take a while till we get to that point, but I think there is a certain amount of recovery. They do have a huge amount of money to throw at things, and there are a lot of smaller studios out there looking quite lasciviously towards Tencent as a possible investor. Things like we're also seeing UMG, the Universal Music Group, a unit of Vivendi, gonna be a public company sometime the next year or so. Tencent is considered a prospective investor in that. So it has a lot of powder that it can fire up if it needs in order to expand its position in any number of spaces. And there's still a lot of optimism about things it can do.
Down 21% year over year, so it can be a bit of a volatile stock, Alex. Who's in this stock? Is it hedge funds? Is it insurance companies? Is it big pension funds? Is it just Chinese retail investors?
Well, I mean, the biggest one is clearly Naspers, the South African investor, which pumped in 130 million 20 years ago, which is now worth 130 billion. So, there are a lot of those kind of early investors still with a big stake in the company. Look, it might be down year over year. That is a lot to do with this regulatory environment, the Chinese stopping the approval of games. But it's still one of the big giants in China. There are only 3 or 4 of them: Tencent, Alibaba, Baidu, and to an extent Huawei. Now, if you're betting on the future of China and its technological future, it is one of those stocks which remains incredibly appealing.